Okay, lots to discuss with the management at Marico as well this morning on urban consumer trends, refocusing on the food and hygiene category, as well as whether or not those input costs will be passed on to customers going ahead. So let me welcome in Saugata Gupta, the MD and CEO. Saugata, thanks so much for joining us today. Now, with the unlocking that we have started to see, what are the kind of consumer trends that you're observing? And, especially in metro cities where we have seen cases on the rise, what are the different dynamics that are playing out?
I think while there is obviously because of unlock, a lot of things are opening up. Having said that, I think consumers continue to be careful in terms of spends. Discretionary spends are still challenged. I think having said that, the 2-3 big trends that we were observing earlier, that the focus on staples and focus on items of daily consumption, I think as far as going for trusted brands, whichever brands are available. Number 2, I think shift towards health and hygiene and health and immunity. People continuing to eat more at home, and therefore food consumption occasion at home, whether it's cooking or ready to eat or ready to cook, is going up. E-commerce as a trend, people preferring e-commerce or topping up in the neighborhood retail or getting home deliveries done, buying personal care through chemists. So all of these trends are more or less still in play. I think what is going to be changing, I guess, is that I think now you will get a real picture of how much going forward in the next couple of months, the impact on disposable income, and therefore consumers will be careful in terms of spends. We need to be continuously focusing on giving value to the consumer on pricing and making the product available. And therefore, I would say that otherwise there will be risk of people wanting to downtrade or titrate their consumption. So I think that's what we feel. And I would say going forward, urban will continue to remain a little more challenged than rural. Rural, given the agriculture, given that the spends on Manrega and also the spends the government is doing to ensure that the migrant workers are comfortable in terms of those who have moved back to the rural areas, I think rural will be in a little better shape than urban.
Saugata, last time we spoke as well, you talked about challenges on the supply chain front. Have things normalized now, or do you continue to see issues there?
So I would say that the entire supply chain, at least the production operations, are near normal. Having said that, obviously, as you know, in some of the big cities, there are still COVID cases, and obviously the distribution system is not back to the old normal. And there are ways we are doing it, as I said, in terms of high throughput outlets, driving direct distribution, using food aggregators or e-commerce. Even the modern trade is trying out the omni-channel and delivery. So I think given the big cities, I would say the last mile is still not stable, and it will take quite some time, because at the end of the day, I think we need to have a stability or a flattening of curve in terms of the COVID cases there. But as far as the back end is concerned, whether it's manufacturing and all, I think it's near normal. But obviously, we are doing with very high standards of safety and hygiene and lower number of people. So what has happened is that the comfort which was there earlier in terms of stock levels across the system, that is not there. We continue to have hand-to-mouth existence as far as stock levels is concerned, because you are operating with a much reduced workforce.
Right. Saugata, on specific brands and products, wanted to understand about Saffola, because that, as we understand, has managed to witness a strong growth during the quarter. And there's been a shift in terms of the consumer trends towards food and hygiene. Are you also looking to change your strategy and focus more on perhaps mainstream food products?
So I think if we look at, I think there is huge opportunity in the core. Because at the end of the day, I think if you make the product available and attractive, give value to the consumer, the stronger companies will get stronger, and there's opportunity to continue to grow the core. As far as the new elements are concerned, yes, I think we believe that food and health and hygiene are critical components of our growth agenda. In terms of, because last 2-3 years we were investing behind premiumization of our personal care portfolio in terms of male grooming, skincare, and premium hair care. Now that portfolio, given its discretionary, other than that, the very top end and digital, we believe that that portfolio, we have to keep a pause at least. We are obviously over the medium term will continue to stay invested, but this year we will not invest in that part of the portfolio significantly because given the discretionary nature, given the fact a lot of purchase happens through beauty outlets or through modern trade, through promoters and beauty advisors, that part of the portfolio will get challenged. So we are refocusing our efforts towards health and hygiene and towards food. And there could be some few more launches we could look at in both these areas as we go in the next couple of months.
You know, talking about grooming category, we understand that retailers are saying that amidst the lockdown of 3 months, there's been a massive surge that has come in the grooming category in particular. You have a fair share of grooming products in your portfolio, and they contribute high margins as well to your balance sheet. Has that segment seen a multifold increase?
Obviously, it's recovering, but I think they can't be growth drivers simply because I think a lot of these categories have low penetration. At the same time, their price outlay is high. Other than very, very low outlay of the grooming products, it could be in our portfolio, maybe a set wet 10 rupee pack or a Livon sachet. But when it comes to, larger packs, the ability of these larger packs, people, driving penetration and usage when discretionary income will be challenged, will be difficult. So they are unlikely to be growth drivers. But having said that, you are right that compared to the situation in April, May, things are improving. But they are still not back at the last year's run rate. So if you ask me that, if you look at our portfolio, I think we are tracking at 90% plus of our run rate, last year's average run rate. But this set, which is of course, just to give you a perspective, luckily for us is only 8 to 10% of our total portfolio. That it is far below 90, but it is recovering, and especially recovering in e-commerce and maybe chemists, because we see a lot of consumers buying their personal care products from chemists.
Hi Saugata, good morning. Nikunj also joining in. Now the copra prices, which is a basic raw material for your coconut oil, they've come down. On the other front, paraffin oil prices have also come down, which means there is a large drop in raw material as percentage of your total cost. Are you likely to retain this, or are you likely to pass it on to your customers and to your other dealers?
Yeah, I think on a case-by-case basis, yes. I think driving that is very important. And fortunately for us, I think both our key raw materials, we believe that it will be softer than last year. And therefore, we will be able to ensure that the consumer gets value.
Now, at a tough time like this, Saugata, frankly, companies are looking at conserving cash. How do you see operating expenses shaping up?
So we've started an exercise to conserve costs. At the same time, we are clear that costs which are investments for the long-term growth, we will not compromise. So therefore, things like investing behind digital, investing behind leadership capability, investing behind people safety. We will also like to ensure that we protect jobs and salaries. So these are, but there are a lot of other costs we are looking at. And as far as I think the overall A&P is concerned, I think as I talked about that, we will not overinvest on the entire premium personal care part of our portfolio, which requires high A&P spend. So there could be a situation that we will end up spending maybe 100 basis points lower A&P compared to last year, without compromising on any share of voice or impact on the core part of the business or in food and health and hygiene.
So customers have also moved from a monthly consumption trend to a weekly consumption trend. We're also likely to see further down trading. These are things that we've already noticed. How are you expecting consumer behavior to trend in the next few months? What are you already picking up?
So let me just give you a perspective. I think there was a challenge in terms of the rural consumption before COVID. So the situation, even if you look at the July-September quarter and October-December quarter, in a lot of FMCG categories, rural consumption was stressed. So I think that was something which we were seeing some signs of recovery as far as we were concerned in Jan, Feb, March before going into COVID. I think the situation will change a little bit. And of course, in March, some of the essential categories, especially in staples and health and hygiene, one saw pantry loading towards the end of the quarter. And even in April, some companies would have experienced, especially in food and health and hygiene, there was pantry loading. Now that has stabilized. Having said that, I think going forward, we see much more challenge in urban than rural, as I spoke to you about some time earlier. In urban, there are two things. I think in terms of the stress in economic activity and therefore impact on disposable income will be higher in urban than rural. Also, there has been migration. So therefore, the entire bottom of pyramid and the middle of the pyramid consumption, there could be downtrading definitely. And therefore, the premiumization we witnessed in urban in the last 3-4 years will take a back seat. Number two, having said that, I think people are still wanting trusted brands because I think safety is important. And whether it's food, whether it's other categories, people want to go for trusted brands. And I think in rural, I would say that perhaps in relative terms, rural will be better, although obviously outlay and price point packs will continue to be important. And I think companies with direct rural distribution will tend to gain much more because I think given the COVID situation, given the issues on mobility, urban wholesale, which used to feed a lot of rural demand, will not be the preferred choice compared to companies who have direct rural distribution.
So, Saugata, looking at the current environment and the kind of observations that you've had ever since the COVID-19 pandemic hit us, would it be fair to say that as a strategy, Marico is going to be stepping back from other segments and maybe focus more on health and hygiene?
So we have just recently launched, it's a soft launch, and we are extending this as we go, as we speak, a product called Travel Protect and Home Protect. This is a disinfectant disinfectant, surface disinfectant spray, both for outdoors and indoors. We have just launched this product a couple of days back, and it is being in select channels. It's being scaled up, and maybe we can see some 1 or 2 launches in the next 3-4 months in food and health and hygiene. 1 or 2 more launches to complete the portfolio.
Sure. Now, reports also suggest that, during this period, there have been around 250 brands of different hand washes that have been launched. Now, not all of these will be survived, of course, but how has been the performance of Marico's new launches?
I think COVID has given a reset in terms of the demand and the market for these products. Obviously, all the 250 brands not survive. I think strong brands with differentiated positioning and strong distribution will do well. As far as some of the other places where we have launched, I think they are new category creation. I think cleaning of vegetables and washing of vegetables and fruits, I think is independent of COVID, while now it's sensitive, as people have high sensitivity. I think whether it's pesticides, whether it's dirt and other things, I think this will be a habit creation. I think there are certain things that will become a permanent habit creation. And we believe that I think we have to live with this for some time, this COVID situation, until a vaccine is found and it's completely eradicated. So some of the health and hygiene habits, like carrying a hand sanitizer or carrying a spray, disinfectant spray, I think this will continue. And our job is to create differentiated spaces with them, differentiation, and in terms of strong brands with distribution. And therefore, some of the people will survive, some of them will not survive as the things normalize.
So, Saugata, what is going to be the focus as we step into the next year? Is it going to be margin expansion for you, or is it going to be growth and gaining market share?
I think it's very important to get back volume growth and market share. I think as long as margins, last year's margins we are able to maintain, I think very, very important is to get growth and market share for us. And as I said, that we have to, the situation is still volatile, I think, and uncertain, and you have to almost take it quarter by quarter. It's very difficult to predict what will happen, in terms of over the next 2-3 quarters. It is going to be uncertain, it is going to be volatile, and therefore we have to take as it comes.
Right. Also, when do you expect consumer behavior to normalize back to pre-COVID levels? Any inclination or timeline that you could give us?
It should happen, but as I said, that it depends on how the COVID situation. I think that we are counting on the fact that things will stabilize in a lot, a lot of places, especially in some of the urban centers, which has seen a lot of cases in the last last 1 month. I think things should stabilize. If things stabilize, as I said, I don't think we are foreseeing a situation of a permanent eradication immediately. But if things the growth slows down, the doubling rate slows down, and that gives us, and the economic activity picks up. Ultimately FMCG growth is also linked to disposable income. It's linked to economic growth. It also depends on how economic growth shapes up. Having said that, I think within FMCG also, the companies, we are lucky to have a portfolio of daily, items of daily consumption. Also companies which are strong in distribution, strong in cash, and of course, in terms of agility in supply chain, are more likely to do better than the companies which don't have that.
Okay, great. Thanks so much for joining us, Saugata, and for answering all those questions extensively.